objective here today is to make you understand about the technicals, about the disciplines of trading, which every trader or every investor should follow. Uh, this session is very focused towards traders as well as for investors. It's like those who are really interested to make some profits out of their capital in a shorter or maybe in a longer duration. I am just going to demonstrate how trading can happen in real markets and how technicals can help you to understand the stock trends and the stock behavior in various timing, various schedules. So I will share the discipline also. I will share some analysis. Analysis is all data science, which is basically used in technicals. So we take into prices, we take into considerations, volumes, some averages, some mathematic calculations, some algos which are being applied over prices, and we can see the final results. So we are going to see the various technical indicators, we are going to see various technical oscillators just to understand the market behavior in terms of trading, right? So intraday traders can also be benefited, BTST traders can also be benefited, and all traders who are really interested to make money out of the market would be benefited from this session. Let me take an example of HDFC Bank. Now you see this is the candlestick chart. This is a daily frame candlestick chart. Now what you can understand by this candlestick chart, I don't know what you have understood. Many people determine this chart differently. So uh, so there are many things which can, if you have learned about candlestick patterns, you can read this candlestick, you can read candlestick patterns, but I will rather advise you to use some different techniques. So right now you can see the last candle of the HDFC Bank is red, so that means the stock is going down. Why the stock is going down? Let us apply some indicator. Let us apply some indicator which is a Bollinger Band. Bollinger Band I have applied. Now see, as you can see, why the stock is falling today. Maybe the reason the stock has touched upper band today. If the stock has touched upper band is a resistance for the stock, and you can see the stock is in the contraction mode. The band, this is a Bollinger Band, and the Bollinger Band is on contraction side today. Today means this movement is based on contraction. This is a contraction. So other before that it was working in expansion. You can see this was in expansion mode. Now Bollinger Band was through expansion going into contraction like this, it going like this. So it was into expansion mode before some days back. Now it is into contraction mode. So contraction mode right now there are three lines in Bollinger Band. One is a middle line, one is a top line, and one is a bottom line. Right now the stock has touched the top line, and it has taken the resistance from that level. So Bollinger Band helps you to understand the support and resistance levels over the price. So I have applied this technical strategy over the price and the price of HDFC Bank. So that is why the chart is there. Chart is a historical price history as well as the current price movement of the stock. Bollinger Band shows Bollinger Band will not show you the exact entry. Bollinger Band will only tell you the stock behavior, the stock support resistance, the stock volatility. That is there. So if somebody is using Bollinger Band only on the basis to determine the entry in the stock, this is not the right approach. You can't make an entry using this indicator. Okay, right? So don't make an entry. Don't decide an entry. So entry is different, Bollinger Band is different. Bollinger Band is going to tell you about the like how can you see the stock volatility. If the band is on expansion mode, there is a huge volatility. So during this period there was a volatility. During this period there was a volatility. During this period there is a less volatility. Stock is less volatile. So when the Bollinger Band is into contraction mode, I mean to say that there is a less volatility during that period. So right now this is on contraction mode, but yes, there are three lines. So what needs to be understand by this band? So this is Bollinger Band. First of all, it is not a signal indicator. It is not a signal indicator. So it is not going to make you a fresh buy and sell entries. It is only going to show you support and resistances, right? Support and resistance and volatility. So these things can be checked via Bollinger Band. So if somebody is interested to know about the stock volatility, if somebody is interested to know the stock support and resistances, Bollinger Band is the right thing which somebody can do the trading. Okay, now we will go to another indicator which we call it as a random indicator, which we call it as RSI. So RSI is a signal indicator, right? This is the signal indicator. So we have applied RSI indicator over the price. Now there is a Bollinger Band, there is RSI, two indicators. I have placed two different indicators over the security price. So one indicator is showing you the stock support resistances, which is on the upper side, band is showing. Now the lower, this particular RSI is going to show you the signal. How you can decide a signal? So the now RSI, what is RSI? A relative strength index. Relative strength index. This is going to tell you a signal. This indicator generates signals of buying and sell, right? So this indicator is going to decide produce a signal. Okay, entry and exit, right? Entry. This particular indicator is going to give you an entry, not exit, only entry. So RSI will only tell you when to enter, but you need to decide when to exit. So Bollinger Band can decide when to exit. Entry can be determined through RSI. Exit can be determined through Bollinger Band. So two different indicators used for different purposes. They have a different strategy altogether. Okay, so I have shown you two indicators. One is Bollinger, another one is RSI. RSI is meant for entry, where we can generate some signal. Now let me show you how we can generate signals through RSI. Let me narrow down the graph. Now the entry here for Bollinger Band is here. This is the buying levels. This is the selling levels. Now these are the selling levels. These are the selling levels. Now there are three entries. This entry is a buying entry, right? This entry is a selling entry. This entry is a selling entry. There are three entries as per the RSI. So this level is a buying level. This level is a selling level. So this level is a selling level. So right now what? Right now RSI stands here. You know, this is what? This is nothing. There is no entry available. There is no entry. So entry is when the RSI. So entry is only when. Entry is when, you know, you can enter through RSI and you can take a signal. Entry in RSI is when the RSI equal to or less than 30. This is an entry. Another entry, RSI equal to or greater than 70. These are two entries. So using RSI, you can create an entry. But you need to believe the RSI, you know, the strength and the RSI calculations. So RSI is applied over a price. So we have a formula where we can calculate RSI, how RSI can be checked. So now bottom line is here that now these two indicators which I have shown you, I have applied both the indicators over the security price, and one indicator which is Bollinger Band is showing me volatility, is showing me support and resistances. Another indicator is showing me an entry. So both are having, so you need to understand which indicator give you an entry, which indicator give you an exit, which indicator give you levels of prices, support and resistances. So every indicator has a different behavior as per. So all the technical analysis software generally made up using these techniques. So some has a very complex technique, some has a very simple techniques. So we can use these strategies.
This video, software, author, host does not guarantee any profits or returns. Stock market trading is subject to risk. Trader/investor must use this software, advisory on his own risk. Presenter/company does not give any guarantee on accuracy of the service and software. Past performance of the software does not guarantee in future.